So in this video, I will be giving you guys my personal opinion about where I feel the projection rate of the market is gonna go. Now, I'm not talking about the overall market. I'm going to be giving you guys 3 currency pairs, doing my own research, doing my own feedback, doing my own analytics on all of this stuff. So use this information as you would. And maybe next week, I'll probably show you guys my results. But the 3 currency pairs I'm gonna be telling you guys about today is Euro USD, USD JPY, and NZD USD. So to start things off, I wanna talk about everyone's generic favorite currency pair, Euro USD. Now, the overall trend of the Euro USD has been pretty bearish for the most part this year. We've had come across signs of potential reversals throughout the year, but for the most part, it's been pretty bearish. One thing I did do is that I started from the monthly, and when I started from the monthly, I saw that we did hit a potential swing low or a lower low. After that, this is again one of the signs where we could have a potential reversal. However, one thing I do like to tell all of my students is that you always just want to follow the trend. Especially if you're new to the day trading game and everything, if you're new to any skill you're trying to obtain and master in life, you need to just follow the trend. No, I'm just playing. But in all seriousness, you do need to follow the trend. And when I did see the lower low take place on my monthly chart, I did use that as a sign that we might be on a reversal. But for some reason, all throughout the month of August, price want to act up and don't want to give me a direct line of trend. What I mean by this is that if you look right behind me, you can see this little consolidation box. That's what I like to call it. And what you can see throughout this box is that price is just constantly going up and down, no real line of direction, you know what I mean? After breaking down everything, a lot of times I do tell my students to just react towards the market, never assume what it's gonna do, because that's how you lose your money. Simply just react and just wait for the next move. It makes your whole life a whole lot easier. Set alerts if you have to, so you don't have to check, so you don't have to be on your phone, laptop, whatever all day. When you set these alerts, they'll just remind you that your candlestick is crossing past your point, and you could easily just get in on a trade right there. Make trading simple, not harder. So yeah, back on topic. But like I said, in my consolidation box, there is no direct line of trend, and I know I told you guys not to be assuming, but for this video purpose, for me to give you guys my predictions, I literally have to assume. What I wanted to happen was that if you see this line right above my consolidation box, you can see that's where I wanted price to hit. Because if price hit my resistance point, it just proceeded to shoot down. That's a clear sign of continuation. I could have easily gotten in on the trade, but as you can see, price for some reason just stops right there and it just starts consolidating. You can see somewhere around here that this is where price just kind of stopped. That's the peak. But what I personally feel is going to happen on this week is that I personally feel like price is going to have potential for it to hit my red resistance line. If all goes well, it should have continuation on the bearish trend. So my overall prediction for Euro USD is that it's probably gonna be bullish maybe for the few couple of days, but the overall projection of the pair, I can see it being bearish. Next currency pair I'm going to be talking about is USD JPY. So for USD JPY overall throughout the year, it has been pretty bullish. And if you see, as I have it marked up, we have hit a potential peak. Although the US is going through a recession right now, I have gathered enough information from my trusted source, MarketWatch.com. Employment numbers for the US is showing signs of weakness. What this means is that our US economy is slowing down. And not only that, it's showing signs of reduced speed. What this also means is that if our economy is slowing down, this is now giving the Japanese yen an opportunity to strengthen, which means we can start seeing bearish opportunities taking place. If you were to be looking for swing positions, you do want to be more in favor of the bears, even if you do check it on the 4-hour time frame. You can see that price might play with that 136 area, but even then, I can confidently say that I'm going to be looking for bearish opportunities this week. So my overall theory for the projection rate of USD JPY will be bearish, because the Japanese yen is only strengthening as our economy is starting to slow down. Okay, y'all, so now for my third and final pair, NZD USD. So breaking down this pair, I would start on the monthly, and as I started on the monthly, I did notice that overall we are on a bearish trend. Now, one thing I did notice is around my 0.6884 range, we came across a hammer. For those of you that don't know what a hammer is, very short and brief, a hammer, more oftentimes than not, it's an indication of the end of a trend, a reversal sign for lack of better words. Now, since I noticed this hammer take place, I also viewed that price did not give that much of a fight when it came to reversing into a bullish trend. Now, I'm not sure if you guys can see this all too well, but right here you can notice that we are at the bottom. This is where the hammer took place, and this is what I mean when I say it didn't give that much of a fight. It literally stopped right here before it's starting to show signs of becoming bearish once again. And one of the lessons I do teach my students and other individuals is about pullbacks. This is a perfect example of what could be a potential pullback. Reasons why this could be a potential pullback is because the overall trend of the market on the monthly is bearish. We know this. But as we all know, the market does not move just in one line. It has to retrace at some point throughout its continuation. You can see over here that price completely took a nosedive for the bears. It came back up, it took another nosedive for the bears. Now it's coming back up, but for this current price to even show any fight that this is not a pullback, now I'm not saying that can't happen, but due to my RSI and my MACD and my other indicators that I use and my fibs and all my other indicators that you guys don't even know a damn thing about, this is why I confidently believe NZD USD is going to be on a bearish trend continuation. And I could bore you guys with a million screenshots of all the articles that I took just favoring why the pairs are projected to go in the direction of my favor. But nobody wanted to look at those, and let's be honest, you're not even gonna read those, so I'm not even gonna waste my time throwing it on the screen. But I wanted to give you guys some insight to at least teach you something. And you know the best part about this whole video? You can't even see if I'm right or wrong without doing two things. Without watching at least 3/4 of this video, or you gotta do your own research and you gotta go on TradingView, you gotta go on whatever broker you use, and you gotta look at the charts yourself. You have to do it yourself. I can't do it for you. I'm only gonna feed you so much on this channel. Now my day ones, they get the sauce. But that's a conversation for another day. I did just wanna give you a little bit of information. If you guys felt like I did tell you something educational, feel free to hit that subscribe button, hit that like button, because I know you keep ducking it. And make sure you drink your water. Y'all see me drink it at the start of every video. But nonetheless, I will see you guys next week, giving you my full results, letting you know how my predictions on this video went. So I'll see y'all next time. Stay safe.